running. I should be up and running on the VTF, and I should be up and running on YouTube. If somebody's able to confirm the YouTube side of things, I would appreciate that. I'm going to do the disclosure. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. It was a good day. A lot of good opportunities out there. So let's hop into it. Thanks, Gabriel. All right. So strong day today, right? SPYs are up a percentage point. Qs are up 1.3%, 1.4%. Russell closing up 0.5%. The interesting thing today is the relative strength in the NASDAQ with the degree of the sell-off in the TLT. We identified in yesterday's afternoon meeting that this TLT is in what I would call a bearish consolidation, which is a little bit different than a bear flag, but it's still bearish, and the ADMA had now caught up to the resistance of that. So usually when you're going to get downside continuation on this sort of pattern is when the ADMA catches up. That's exactly what happened. That means interest rates are higher. What we expect to see on the TLT, given continuation of a bearish pattern, is relative weakness out of the NASDAQ, relative strength out of IWM, XLF, value type names, and we didn't see that today. We did see the breakdown in the TLT, but it was the NASDAQ that was actually relatively strong. So it's just one trading day, so I don't want to put too much onto that. And it definitely could just be a mean reversion type of situation. Because in the same way that you could be a little bit surprised about the degree of the strength in the NASDAQ with the TLT selling off as much as it did, the flip side of that is if you look at the last 4 trading sessions or so of TLT, it had been stabilizing and moving sideways, but we saw continued relative weakness in the NASDAQ over the course of the last 4 or 5 trading sessions, even as the TLT has moved sideways. So there's not a perfect correlation there. We know that broadly higher interest rates is not great for tech, and this easily could just be a mean reversion type of situation, because even with the degree of strength that we saw in the NASDAQ today, it really only brought us back to the ADMA on the daily chart at highs. At highs today, we didn't even actually tick the ADMA on the daily chart. So far, I would say this is an oversold bounce. The NASDAQ and the S&P are definitely not out of the woods yet, though it is a solid sign if the NASDAQ is able to get above this negative Maribozu from yesterday and hold above. They actually didn't close above it, so you're not even getting that signal yet. But if we can start getting above here, and then if you look at your 15-minute chart, it's similar to SPYs. Look at the SPYs also. Negating yesterday's candle is important because of the volume, yesterday's daily candle. But even if you negate that, you get into this 360. There's a lot of price congestion here between 360 and let's just call it 362.50. That the NASDAQ's going to have to work its way through. Similar with the SPYs, go back to the daily chart here. The SPYs were able to negate yesterday's candle, closed more or less pretty close to yesterday's high. But again, despite the degree of strength, despite the decent percentage bounce today, it's really just a move back to the ADMA, and it's a move back to resistance. There's pretty big resistance in the SPYs now at 436. And 436 had been previous support. If you guys remember when we broke down here, we were looking at 436 because that was the August low, basically two major lows in August and a low in July. So that 436 that was support has now, these past handful of days, started to act as resistance. You can see that here again. I'm going to my 15-minute chart, so we can go back a few days. Today's high is about 435.50. So we basically got up to pretty close to that 436, got rejected by it. We got up there 2 days ago as well, rejected by it. And then back here on September 28th, 29th, 30th, that area has a lot of price congestion and kind of broad resistance. So definitely a really strong snapback here for the market today. And that makes sense. One of the things that we highlighted this morning, and today turned out to be a pretty good trading day, despite the fact that I thought that based on how we were gapping, that things could have been pretty difficult. Um, One of the things we spoke about in the morning meeting today, which I'll just highlight again real quick, if I can go to Pat's note. So Pat's note has a couple of these sentiment indicators in it, and these tend to be pretty spot on. My concern was that the gap up this morning was getting us out of that buy zone on the short term tactical sentiment. So I thought that made things a little bit tricky, but we still saw that bounce all the same. And we also highlighted that this medium term sentiment also is in the buy zone as of yesterday's close for the first time in some months. So, definitely kind of additional layers of probability that are worth noting. I'm not just, trading the market purely based off of sentiment indicators. And, I'm sure if you were to look at that short-term tactical sentiment indicator in the coronavirus crash, it probably just stayed in the buy zone as the market continued to go down and down and down and down and down. So it's not the end all be all, but it's an extra layer of probability, and it does tend to have some decent accuracy is there as well. So again, really strong snapback here in the SPYs and Qs, but from some oversold territory. There's still a lot more work ahead of them for the bulls if we're going to turn this thing around. We got to reclaim those resistance levels. S&P SPYs need to get above 436. Qs need to really get above yesterday's high, and that was it 362.50 that I mentioned. Yeah, 362.50. And then the IWM, interestingly enough, was relatively weak today, but it's just still within this big consolidation. I mentioned that there was an inside day yesterday, but we don't want to care too much about that inside day because it's within the confines of such a bigger consolidation. The Russell here has been going sideways for basically the entirety of the year. So that's kind of where our major indices are. And again, it turned out to be a really good day today, even if the open wasn't the layup that we were looking for. I had mentioned in the morning meeting, I thought today would have been a layup if we could have gotten a gap down. Instead, we kind of got that small-ish gap up that kind of had me a little bit concerned about doing too much off the open. But it was pretty quick on the 5-minute chart here. We had about 15 minutes or so of the market giving us not much, right? You're looking at the SPYs here, and it was kind of difficult to figure things out. But we created this pivot, this crazy-looking candle. Just a candle of uncertainty would be the best way to describe it as a second 5-minute bar of the day. And then the ADMA caught up to that low, and then there was this inside 5, and that inside 5 broke to the upside. And once this candle came in at 945, and then especially the 950 candle when we broke highs, things were looking definitively more bullish, at least on the small time frame for the S&P. And then we were trying to measure where we could get the bounce to. And, we were talking about, I think, the area between 433 and 444 could initially be some trouble. And we discussed, possibly putting on some hedging type trades to the short side of the market if we got a signal. I really didn't see too much of a signal here on the way up, though, to actually execute that. Okay, fine. A little bit of an extended doji here at 1030. We also know that 1030 is usually when the 15-minute chart becomes more important. So we could have seen a bigger correction than what we actually saw. So, maybe you're trying this off this 1030 candle, doing a little bit of short selling into that area. But for the most part, I really didn't see too much of a signal. And almost at any point today to be doing a lot of short selling. It was more about, I think, booking profit on longs into the up move. And we did mention that even though that area, 433, 440 to 434 is where we want to start looking, right now, with volatility increased, ranges are increased. A lot of times the number that you think might be the right number, you got to tack on like a little bit of a premium to it. So if you think that, a bounce to 434 is all that's really in the cards for the market, throw an extra dollar or two on that, because that kind of tends to be what happens when ranges increase and volatility increases, and that's certainly what we've been seeing. So where did we focus today? Well, there's a few things that we highlighted, a few things that I traded, and a few things that I didn't trade, but I also highlighted in the morning meeting that worked out really well today. One sector that I really brought up was the XLF. Paying attention to the XLF today, particularly Bank of America and JP Morgan were the ones I wanted. Bank of America gave a pretty decent move here. Didn't close fantastically well, but at highs, it's starting to be fairly extended. And Bank of America is not really a momentum stock. So into that kind of degree of extension, it's hard to get real continuation there. But Bank of America was pretty solid today. JP Morgan was the other one that I was looking at. It never really broke yesterday's high, which I actually like. So JP Morgan's given us an inside day. We can continue to pay attention to that tomorrow, especially if interest rates keep doing what they're doing. It bodes well for financials, though I am looking for some interest rate stabilization. We'll see if we're actually able to get it. So that was solid. For me, my best trades of the day, I called them out, kind of right as the market was opening. One was VXX short. This VXX short, I was talking about it. I didn't realize I have executions on here. This VXX short has just kind of been a trade that's continued to pay me. It's just such a garbage product. This is what I was talking about a little bit to the VTF in the last half hour of the day today. The VXX is such a garbage product because of its time decay that, yeah, there is risk here in being short this stock because if the market crashes, then this thing can go up rapidly, very quickly, and it can go up hundreds of percentage points because you're short the product. If you're looking to take like a bet long on the market by shorting VXX, your risk here is in a very fast, hard sell-off. This thing can actually go where it happen very, very fast, and then you can make hundreds of percentage points by being long it. But outside of that, this thing is subject to this time decay, and this thing just eternally bleeds. And it's such an awful, awful trading product. I mean, you can see here it was literally $350 million at one point. Obviously, has had a whole ton of reverse splits over time. So I actually do like trading this to the short side as a proxy for the market bouncing higher. I like the pricing of it here when it's trading at mid 20s to $40, kind of that range. I think it trades really well. It trades pretty thick. I can take a lot of stock in it, and because of the time decay, this is what I was really trying to highlight. Is look at the high here in the VXX. And I've been trading it pretty consistently to the short side throughout the entire market correction. So you would think I'd be getting smoked in this thing, and it's actually paid me really well. The VXX here, September 20th, it put in a high of $32.41. I've been short since then. $32.41 is that high that's the Evergrande sell-off day. So if we go to the SPYs, 920, that's this day right here, when the market had that really big gap down on the Evergrande fears, and then they fully filled that gap. Well, guess what? Since then, the SPYs have broken that low yesterday, right? The Qs are significantly below that low, and the IWM is not. But look at what the VXX has been able to do, right? If the VXX was this perfect product, then this thing would be trading significantly above the September 20th high, but it's not, again, because it's a garbage product. 32.41 here being that high, you'd think that this thing would be touching $38 by now. So I'm sure people who are trying to buy VXX for the market sell-off here, they've got the market sell-off, they're probably pulling their hair out because this thing just can't even really clear 28 these last handful of days, even as the market's kind of continued lower. So that was one of my better trades today. Also, SOFI, I know a few of you guys got into this with me today. I'm definitely disappointed with SOFI's close, but it gave a great opening trade. SOFI here, the opening trade. Oh yeah, my executions. SOFI here on the opening trade was definitely solid. Called this one out right as I was taking it. And caught this huge bounce. The reasoning really behind the trade was off the relative strength from yesterday. $16 is an important level for SOFI. It tailed below it on the 30th, but still closed at it. So 16 was still intact even on that day. And then yesterday, I had noticed that this thing tried to be so strong early on. The whole market, we know, was very weak yesterday. But this thing gapped down, filled the gap, went decently positive. And then I kind of attributed the afternoon weakness to the market. So I was looking at SOFI today, and I talked about it in the morning meeting about being long versus yesterday's low, which is $15.88. as kind of your initial trade. Really, you want it to hold 16, but yesterday's low gives you a little bit of extra space there. And I thought if we could see that same relative strength with the market hold up, then this thing could give a great move. And it did off the open, but it closed really poorly. So I was able to book enough profit on the way up in this thing, and then I kind of reloaded a little bit of stock here, and I did keep some of it, but it didn't close as well as I wanted to. But it is still above 16, so we'll see what that thing's able to do. What else? Baba today was a fantastic call out. Zahor called this one out very early today, so appreciate that. Good opening volume, great opening candle. I was looking for this yesterday. Yesterday I called it out. I'm gonna trade back through 140 off this candle when it broke lows to buy back through 140 and take on about 55 cents worth of risk on it. It gave a big enough move yesterday where people should not have lost any money on it if you had a good game plan and good execution. But it eventually rolled over and failed, and the market itself is obviously so weak also. And then today it really worked. Opened up below 140, good volume came in and traded right through it. It was pretty strong all day. Still, with the weakness that Alibaba has had, it's not even back to the ADMA on the daily yet at this point, but it's an okay day one. The volume you would like to see a little bit better on this. What did JD look like today? JD also snapped back to the ADMA. Got back above this Maribozu low, which I do want to see. But this thing, both Alibaba and JD definitely have more work to do. But it was a decent initial day, and we saw this KWEB get hit with some bull flow today, I think a little bit before 10 a.m. So that probably helped with the strength in the Chinese tech stocks. So that was solid as well. And I'm trying to see if I have anything on my list to discuss that I didn't go over. No, that's pretty much it. There was a couple other good day trades that were out there that we were able to identify during the trading session, but nothing I think we really need to go over. So with that said, I'm happy to take a look at what you guys are looking at, or whatever questions that you guys have here. So again, just for this week, I'm only working on one screen, so a little bit handicapped, but I have the T3 Live Virtual Trading Floor app on my phone, so definitely worth a download if you need to check the VTF out on the go. Mark asking about ANY. Yeah, ANY was one of the ones that we saw catch some early volume today, and that got me a little bit excited. A lot of these types of stocks are really strong, especially early on. And by the way, by these types of stocks, I mean these like speculative high multiple names. This Palantir tried to go early though, but then closed really bad. So a lot of them had. Is Palantir trading up right now? Am I missing some sort of news on it? Sure looks like it. But anyway, a lot of these stocks they gave these initial moves and then rolled over a little bit harder than I would have liked. ANY, also kind of similar category type of stock, large short float in this thing, I'm pretty sure. Gave a great opening move, but then pulled back way too much. So I was unhappy to see that. But though this thing also seems like it's bouncing here after hours a little bit. You want to pay attention to these names when the volume comes in. And that's exactly what you guys did this morning when you saw the volume starting to creep in on this thing. Like 945, 950. Without the volume, you don't want to be involved in them. You need the volume for the short squeezes to come in. You need the volume for the momentum to be there. So this was one of the ones that we're looking at intraday. I didn't think it closed very well, though. But now I see it's trading up after hours. I don't know if it's trading with Palantir. It looks like Palantir is trading up also. The Army selects Palantir for intelligence data fabric and analytics solution. There you go. Good stuff. Good stuff. Oh yeah, the crypto names was also a call out. I know that Greg has been all over this BTBT. So BTBT had a huge move today. Broke higher off this inside day. Hut was another one that I had mentioned yesterday. This gave phenomenal follow through today as well. Riot and Mara are the ones that we usually talk about a lot more, but Riot and Mara, particularly that Riot chart, I don't know why. This Riot chart fell so out of play. There was a period of time where Riot was the relatively strong stock compared to Mara, and then that's just totally. Sorry, that's Marriott. That just totally changed. This Mara here has definitely been a much better trading vehicle than Riot. Also, really strong day. So that's another one. Good job, team, today on that. Good job being all over that BTBT, Greg. Very good stuff. Going back to the app here, scrolling through for questions. Next thing I'm seeing here is from Gabriel. What do you recommend in these days with a really tricky open? I started the day thinking to stay more hands off, given that the big bounce today was unexpected, so I missed opportunities. Yeah, so um, what we're striving to do in the morning meeting is take the information that we have pre-market and come up with a big picture game plan based on the news and the technicals and the money flow and everything else that we're kind of looking at. But then we also need to be able to be flexible and adjustable. So the morning meeting today, because of how we were gapping, I was telling you guys, looks like we're set for a little bit more of a hands-off type of trading session today, where we can selectively look for stocks that have relative strength, news, volume, and try to be involved in those. I do think that the market signaled a little bit of different information. We're not like I was just reviewing this 5 minute chart of the SPYs, kind of starting here at this 9:45 to 9:50 a.m. Into this zone. Whether you're looking at the 9:45 candle where it broke the inside five enough because the ADMA caught up, or the 9:50 candle where we broke highs, that was a little bit of a signal to me that we could definitely trade higher to where I was thinking 434 as an initial target, and then 436 we know is bigger resistance. And impressively, we traded all the way up almost at 436. So if you stayed hands off today, and I wouldn't say that I was, super aggressive by any means, though I did, put on enough stuff and I traded pretty well today and was able to make a decent hunk of change for myself. Um, if you stayed hands off based on what our game plan was in the morning meeting, I think that's a great job. If the market's giving you uncertainty and you're not really feeling it, you're not really seeing it, then don't force it. Stay hands off. Preserve capital, manage risk. But you also want to be a little bit nimble to the changes in information that the market provides to us over time. And I thought that change kind of came in. I'm sure you guys were listening to me on the radio. These first 10 minutes I was like, oh, really, really choppy, really sloppy. This is what we expect based on this open. And I was like, okay, we got this pivot here. Okay, inside bar. Let's see where this breaks. ADMA caught up. And then I think I was communicating it. Once we broke this high here at 9:45, the 9:45 bar, that's when I think that things started to change. So again, if you were able to recognize that and be nimble enough to take advantage of it, great. If you weren't, if you stay a little bit more hands off today because you thought the gap up was making things difficult, and I still think for sure we would have had a much easier day with even bigger money had we actually had a gap down this morning. If we could have gapped down to 425 this morning in the SPYs, I probably would have been talking about loading the boat on some longs for at least short term trades. But we didn't get that. So, definitely a little bit more of a difficult open if you stayed hands off because you weren't seeing it. I think that's a fine job. And then we want to be, nimble and pay attention to the new price. Similar to yesterday, right? I was not expecting, especially if you look at the Qs, I was not expecting the Qs to be or the market to be as weak as it was yesterday. TLT was relatively stable. The market had just given a big bounce back day on Friday. The Qs had given that little bit of a hammer doji, but not on confirming volume. I didn't think that we were going to have a very weak day yesterday, but very quickly the market made me have to change my game plan. If it wasn't right away in the beginning part of the day, without a doubt, it was by this 10 a.m. bar yesterday. When we broke lows at 10 a.m. and then we broke the lows of the tail from the daily candle from Friday, you knew. So you got to listen to the message of the market because it is changing in real time, and I do my best to try to communicate that into the radio as much as I can. You know, I'm right a lot, but I'm wrong a lot too. I'm definitely not perfect. That's why risk management is so important. So that'd be my answer to you on that question there, Gabriel. So scrolling up through the VTF here again. Yep. Yes. So Nick here providing some really valuable information on how the VXX product works. So I'll just read out loud his comments because he's spot on in the information that he's providing here. The VXX is subject to negative roll return as its natural state is in contango. What this implies is that if you need to maintain a 3-month forward position, you need to regularly roll contracts and buy a new one as the previous one approaches maturity. The next one will be more expensive. So basically, essentially, you are buying higher and selling lower. That is why the VXX is always declining in value. Yep. So that's exactly correct, and that's kind of where a lot of that decay comes from. From Rich here, if you were so inclined, then how would we have executed a cute short today or not? Yeah, so I know that Felipe and a few people here were definitely looking for that short, and I think you guys were pretty selective and being patient on it. My biggest thing was, I know Felipe, I think, mentioned that he was executing a small, and he said it. One of the great things that's about Felipe is not only is he an excellent trader, but he always makes sure to type into the VTF or very regularly will let everyone know, guys, I'm really heavy in this, or guys, I'm doing this really small. And here he specifically said, guys, I'm starting to short some spies. I think it was spies. It might have been Qs. I'm starting to short some spies, but I'm doing it really small. And that's key that he mentioned that he was doing it small. Basically, that means he's more or less putting on a small initial feeler. He's probably got a bunch of longs on also, so it is acting a little bit as a hedge. And he's watching for a signal to actually get heavier. And then that was my feedback also when he said that. I was like, yeah, we can start to look for shorts here, but this market's looking very strong. These ranges are very wide, so it could go a little bit higher than we expect. So let's really make sure that we wait for a signal. So my biggest thing is I never really saw the signal. Maybe up here somewhere. I mean, that is where we actually happen to pull in, but it was really just a 15-minute correction. I think I even mentioned into this pullback. I was like, let's see if the market can give a higher low here because this is a 15-minute correction, right? Look at your 15-minute chart. Here's your 15-minute correction. Pulls perfectly right into the ADMA and then more or less stabilizes for the rest of the day. Then we got the sell-off into the close, and I know market and close orders were to the sell side, and that probably helped bring us down a little bit. That would be my answer to your question there, Rich. Jonathan from YouTube, do I trade futures? I do not trade futures. I trade equities and ETFs. My thought process on futures is I think futures are also a good product for the active retail trader because of the inherent leverage. It's in the product that you can't necessarily get in an equities account. But I trade in a professional account at T3. So T3 basically gives me all the capital access I could ever want to trade equities. So I find futures to be a little bit limiting just from the standpoint of the products that you can trade. Like some days I wake up and I look at the S&P and I go, okay, market looks like a coin flip here. Well, if the market looks like a coin flip, I don't want to trade it. And the thing about trading futures is almost everyone I know who trades futures, not everyone, but almost everyone I know who trades futures, they trade the S&P, the E-minis, they trade the NASDAQ, but they trade a couple major commodities like oil. I ask myself if I'm limited to the products that I can trade to just those things, and I'm looking at the S&P and I'm looking at the NASDAQ, and they look like a coin toss to me. But what do I do? Do I just not trade all day? It's very difficult to do that. Right? The hardest thing for a trader to do is not trade. But by being an equity trader, I have a realm of thousands of stocks that are listed on the New York Stock Exchange, NASDAQ, and Amex. So even if the S&P is looking like a coin flip to me, I can usually find some stocks that are out there that are going to be correlated, that are going to be uncorrelated to the market because they have news, because they have volume, and I can focus on those things to continue to kind of earn a living for myself. And again, the capital access, the excess leverage that comes from futures is like a moot point for me because T3 gives me the capital to actually trade. So that's your answer there, Jonathan. From Judel here, what does the market need to do for you to get back to bullish? It's a great question. I think this is a day trader's market and not optimal for swing traders. Yeah, for sure. When the market's giving you more volatility, but also uncertainty and not a clear direction, smaller time frame trading tends to then become a little bit better than swing trading. And then the flip side is also true. When you have a heavily directional market like we had for a lot of this year, then a lot of the extra reward for the risk that you put on is actually going to come from keeping positions overnight. But right now we have not as clear of a direction from the market, and we have at the same time an increase in volatility. So where will the market get bullish? Well, first of all, I'm trying to think if I would describe the market right now, looking at the SPYs, as neutral or bearish. And I would call it like neutral leaning towards bearish. Without a doubt, if we start getting closes below like 429 in the SPYs, I know we did have a close there yesterday, then the S&P is looking downright bearish to me. I think above 429, in between like 429 and 445, is kind of where our neutral category is. And then it's really not until we're above 445 that I think that the S&P, the SPYs are back into full bull mode. What about Qs? Yeah, Qs to me here are still bearish. I think even for the Qs to get back to neutral, we need to be getting back above like that 362.50 that I discussed earlier. And then for the Qs to become bullish again, we really need the Qs to be getting back above 374, if not 379. But definitely, I think 374 would be more accurate. So that's a great question, because we always want to know where we are in terms of bullish news. And the IWM here is without a doubt still in the neutral category. And if it gets back above 225 on a closing basis, I think is when it would become bullish again. So thank you for the question. Next here from Chase. Could you take a look at Apple on the 1 minute? I can't because I don't have a 1 minute, but I can look at a 5 minute. So a huge amount of selling volume on that candle. I went short. However, Apple ran higher. Could you explain what happened? All right, let me see. What time are you saying here? 11:55. So you can see the pickup in volume here on the 5. So I can't perfectly explain what happened here because I was not watching Apple, but there's a few things that I can take an educated guess on based on what I'm seeing here on the 5-minute chart. And I would also say, I'm really not an advocate of 1 minute charts, especially this late in the day. Maybe if you're looking at a 1 minute, 2 minute chart in the beginning of the day off the open, I think that can be more beneficial because the opening volatility that's there, and it's so early on in the day. I don't even look at that, to be honest. For time frames that are that small, I just look at the tape itself. The level 2 and the tape, that information is telling you the now, as opposed to charts that are inherently telling you past information. And obviously, there's nothing wrong with looking at past information to assess supply and demand. But what it looks like to me was obviously Apple was very strong here initially, and then it created this base where I have my yellow line right now, 141. And this base looks so perfect to me. This low is 140.99. I bet that's a through print. This low is 141. This low is 141. This low is 141.02. This low is 141. This low is 141.02. This low is 141.02. What does that mean when you have those perfect exact lows like that every single time? It means that there is probably a refreshing institutional buyer at 141. A refreshing buyer, an institutional buyer. So I'm not going to get into all the details on tape reading and order execution, but a refreshing order is a way to disguise your size from the marketplace, as opposed to just throwing a gigantic bid into the market. You utilize a refreshing order to disguise your size from the marketplace. And that's what a good execution trader is going to do. They're not going to just, if you're playing poker, you're not just going to place all your cards on the table for everybody to see. You'd be putting yourself at a huge disadvantage. So that's what a good execution trader is going to do. And then a lot of times what they do is, when it becomes so obvious that there's a refreshing buyer at a particular price, where they still have more to buy, a lot of times what they'll do is they will lift their order to let the stock trade below it. And what that's going to do is it's actually going to trigger a lot of sell stops. So I would imagine, and I used to trade this way. I don't trade super small time frames anymore. I don't really trade purely based off tape anymore, though I do still use tape for execution purposes, and if I'm trading after hours or earnings or IPOs or things like that. But like some years ago, an old Derrick, the way he used to trade, would have seen that refreshing buyer at 141. I would have taken the offer at 141.02, and I would have put a sell stop at 140.99. The idea here behind that kind of tape reading type trade is that you are reading and identifying that there's an institutional buyer here. So you are basically putting on a trade that's like 3 cents worth of risk plus slippage, betting that that buyer holds and the stock bounces. And actually, if you're able to do that, you get these 25-cent or so bounces here a whole bunch of times. But eventually, everyone realizes that this person is there, and it's making it more difficult for this guy to fill his order. So what that execution trader will do a lot is lift the order to let the stock trade below where he was. That would trigger my stop, right? If I was taking that type of trade, and I don't take this type of trade anymore, but that would trigger my stop and everyone else's stop. And then I would actually come in on what a good execution trader is going to do is they're actually going to come in on the bid and they're going to absorb all those stops and get the stock at a lesser price. And then once that happens, very typically the stock has a big reaction in the other direction. And that is exactly what I'm seeing here based on the chart. And again, without actually seeing it in real time, I can't give you an answer. But that is for sure what happened there. And let me reread your question here. So huge volume is selling. So you actually shorted. So you actually took the other side of that trade. When that 141 broke, you hit the sell button because you saw that breaking, but that buyer was there the whole time. They just wanted the sell orders to come in so that he could absorb you and broke it back higher. That is what I think happened there. And then what happens is people like you then have to cover their position, which is actually what enables the stock to continue to go higher. And it's likely that the institutional buyer is still there actually working his order. That's what I think happened. And I would definitely recommend, especially at that time of the day, that you start looking at larger time frames than just a 1 minute. Next question here from Sebastian. I was thinking about an opening trade in NVAX above 183. Yeah, these vaccine names have been very weak recently here. Place high is 185.21. NVAX above 183. I don't really see the significance of 183 in NVAX. I would be looking, if I wanted to take this long, I would have been buying it above yesterday's high. 180, 134 for the inside day and up after the higher volume tail here for upside continuation, hopefully to the ADMA. Yesterday was an inside candle, and it seemed overextended and ended up failing, but I wanted to ask you about the idea. Yeah, no, I like the idea. You got to recognize it's a counter trend trade, and again, the biggest thing is pricing. I don't really understand the 183. I think you want to be buying this at yesterday's high. Where did it open today? Did it open above 181.50? Yeah, it opened just above yesterday's high. So I would have been trying to buy this the second it opened, then because of where it opened, and using some sort of opening. Maybe the full gap fill, or maybe like an opening low as a stop, and obviously it would not have worked. It's also, just keep in mind again what I was saying earlier, that this is a bit of a counter trend trade, and a lot of these vaccine names like Moderna right now, the charts are broken a little bit, so they're definitely tougher right now. So it might not be the best idea in the world to focus too much on like a Moderna or an NVAX or the other one, the one that starts with a B, too much right now. Next from Ernest. Sure, thanks for the compliment. Yeah, appreciate it. Would you please talk on the subject of order execution and how to get away from retail brokers, as I feel they are seeming to not fill orders quickly enough to buy or sell? Yeah, sure. I can talk briefly about it. I take big issue. I really think, this is my opinion, I really think that if, what is that noise? I really think that if you are an active trader, that you are doing yourself a disservice by working with a, air quotes, free brokerage. There are no free brokerages. There are only brokerages that do not charge commissions. Everyone in finance, I don't care who it is, T3, myself, really out of the pure goodness of your heart, you're here to make money. And everyone does it, people do it in different ways. If you're working with a free brokerage, their business model is that they are selling your orders to HFT firms, and those HFT firms are allowed to legally front run your orders. So that results in you getting worse prices. Now, I think that free brokerages are great for investors. If you are a long-term investor and you have a job and you want a dollar cost average into companies that you believe in, which, by the way, statistically, for the average person, based on what I've read, that's like the best thing that you can do. Is just, if you're, and this is what I tell friends and family who, hey, Derrick, give me the hot stock tip. I say to them, here's the hot stock tip. If you can't really focus on doing this like almost full time, then you shouldn't be doing it. You're honestly you're better off kind of dollar cost averaging. You've got to be able to devote real time to trading if you're going to actually be successful. So if you're just an investor and you want a dollar cost average and they're front running your orders at the HFT firms and you get a price on your Apple buy that you're planning on holding for the next 3 years or more, where it's a penny or two worse, who cares? But if you're an active trader, you're doing yourself a disservice. You want to be with a company that charges you a commission. And I've been saying this for years, and it's only been more recently now that all this information about payment for order flow and Robinhood and stuff like that is starting to come to the surface. And there aren't many choices that are out there. You got Interactive Brokers Pro. You've got Line Brokerage, which uses Lightspeed as a software. You have T3 Trading Group. T3 Trading Group has retail accounts through Sterling Trader Pro that are designed very specifically for the active trader and primarily larger accounts. You also have professional trading accounts at T3 Trading Group. So, those are the things that you want to really be looking at. You want to be able to have that direct market access. I'm obviously biased towards T3. This is where I've been, working and trading for over a decade. But in the interest of being fair, I'm just giving you kind of all your options there that I'm aware of that actually have that type of direct market access. So that would be my answer to you, Ernest. And if you're interested in a T3 account or you want more information on that, just you can email info@t3trading.com. Next here for Mike. Question on scalping. Assuming you do market order in and out, what is the minimum profit needed for every 100 lot? Well, that depends on your stop loss. So that depends on your stop loss. And it depends on the type of scalp that you're taking. I don't do a ton of scalp trading anymore. I will at certain spots. But like if you go back to Apple, recognizing that refreshing buyer and buying off of it, what I was discussing earlier, that I would consider that to be a type of scalp trade, where you're coming in on a stock like Apple and you're risking 2-3 cents. That's a type of scalp trade. Or the opposite is true also. The breaking of buyers or the breaking of sellers are types of scalp trades also, which this also would not have worked here. But if you recognize that buyer and you want to scalp the break short, you're scalping short the second that 141 breaks because you're like, oh, the buyer's gone and I want to scalp this because I expect a lot of stops to go off. That would be another type of scalp. Or you can do that's primarily where I'm doing it. A lot of the scalping that I do is based off of tape. I don't do a ton of that anymore. But breaks of sellers, breaks of buyers, technical breakouts. My issue with scalping is, yeah, you can do it based on the tape here. Those types of time frames, robots are going to be better than me and faster than me is kind of one issue, and it's one of the reasons why I moved away from it. It's so much harder now. It doesn't mean you can't be profitable at it, but I think it's so much more difficult to trade that way than when I was like newer in the business. You get away with a lot more, but it's also going to depend on what type of trade you're taking. I used to be taught that a pure scalp was basically like as close to possible as zero risk. Like you want to be in the money on the trade the second you hit the button or you're hitting out. So then again, the answer to your question on how much profit to take is how much risk you think you're taking, and the type of stock that you're paying. But for the most part, if you're scalping, you're taking that break, you're looking for that squeeze, and you're hitting out of your position into that squeeze, regardless of what the profit actually is. And again, the reason why I find it to be reward limiting is even if you took that scalp today, I forget. I think it was someone who traded Tesla this morning in the VTF, called out kind of this opening trade, and I know Tesla eventually rolled over and failed also. But they mentioned that I got a lot of my Tesla at like 788 or whatever, and I make good money, and I was like, great, but next time hold a little bit. We're seeing good option flow come in. The daily chart looks really bullish, and again, even though it would have failed here, I think that look, the big money comes from the big moves. I haven't said that statement in a while, but it's one of my kind of sayings. The big money comes from the big moves, and ideally, the big money comes from the big moves with big size. If you can have big size and catch a big move, that's where you're going to make big money. And if you're scalping, yeah, you're in there, you're fighting the market, you're doing battle, but you're never going to catch that like overwhelming risk reward if you're hitting out of of the entirety of your position within a minute of entering it. So again, it doesn't mean I never do those types of trades anymore, but that would be the answer to your question. Cool. Scrolling through here. Next here from Bill. I have this timestamped at 11:56. Apple Visa plans to. Oh, so I guess there was also news that came out. Thanks, Bill. So going back to whoever asked the Apple question, Bill here saying that 11:56 a.m. news came out related to Apple and Visa. Visa plans to change the way it processes certain Apple Pay transactions. Sources say plan change would trim fees that banks pay to Apple on recurring transactions. Apple executives have told Visa they oppose the planned fee change. So there you go. That probably affected it as well. Okay, Jonathan. If anyone emailed me today, I get so many emails every day, but I work to get through all those by the close. Sorry, I work to get through all those by the time I shut my computer down every day. Next here from Yunlong. How do we stay abreast with the changing market? Well, the best way to stay abreast with the changing market is to be involved with it and to be involved with a community like the one that we have here at T3 and at the Pro Desk, because I think we do a fantastic job of communicating those changes in real time and recognizing the news. And, it comes from a combination of the ever evolving technicals of the market with the updated news that comes out and large money flow that affects the market. So thanks for the question there, Yunlong. Okay, it is 5 o'clock Eastern time, 3 o'clock out here. So I'm gonna call it. Great day today, team. You guys did awesome. I love the communication that was in the VTF today because there's a whole bunch of you guys communicating awesome stuff and a lot of things worked out really well today. So keep up the great work, everybody. I will see you all tomorrow morning. Have a good night.